When we look at capital expenditure for plant and machinery, we need to know the effective date of such expenditure. This is, for example, very important when we want to allocate capital allowances to the correct period. Capital allowances permit the business to knock off some of the profits, essentially, with this expenditure to then pay less tax. So let's look at the timeline down here. Each box essentially represents 1 month. So if we consider that the end of month 0 is the end of the chargeable period, then every obligation to pay that becomes unconditional within 1 month of this end of the chargeable period means that the asset purchased is treated as if it was purchased in that old period. And this can help a business maximize the use of capital allowances because they might just squeeze it in the old year and then can use the rest potentially in the next year. Another time frame to consider is when the payment is actually due. So let's now consider that the end of month 0 is when the obligation to pay becomes unconditional. However, if the actual payment for the asset is not due until at least 4 months after the obligation has become unconditional, then the purchase is treated as made at this later date. Now you can imagine that this is important at the boundary of 2 chargeable periods.